Doug Coulter of LGT Capital Partners. Now, you were speaking here at Super Return Asia the other day about allocations, and to what extent are LPs in the US, in Europe, looking to invest in Asia right now?
Our general view would be that most LPs in Western markets are underallocated to emerging markets in general, and probably China specifically, given that the importance of China today, whether it's on a market cap basis, a GDP basis, or just a general growth basis. So, we see a lot of LPs who still have little, if any, allocation to Asian private equity. But it really does depend. Every LP is different, of course, and every LP looks at the risk-reward dynamics of China differently.
Yours is a fund of funds.
That's right.
You've got something like $20 billion under management.
That's right.
Have you seen a pickup, though, in terms of fund movement to Asia?
Yeah, certainly both on the GP and the LP side, we're seeing dramatic growth in the size of the industry. I think a lot of people forget that just 10 years ago, if we had been standing here in Hong Kong talking about private equity, it really would have been more of a story about Southeast Asia and about distressed assets coming out of the Asian financial crisis. So, as far as we're concerned, the sort of modern day Chinese private equity industry really dates from 2003, the end of SARS, when really markets took off and LPs started looking, I think, a little bit more seriously at the growth capital markets of China and of India. One interesting thing to sort of note is, we look at the sort of primary industry, which is allocating capital to private equity funds. That's growing very rapidly. What's not growing so rapidly yet is the secondary market, and that's really the trading of LP interests in private equity funds or buying companies directly from managers. And really the reason for that, one of the reasons for that is, first of all, that really the primary commitments to Asian funds really only took off around 2003, 2004, and it normally takes quite a number of years to sort of see those, to see the secondary market grow off the back of growth in the primary market. And then also, again, the fact that many LPs are still very much underweight Asia, and therefore you're really not seeing a lot of sellers of Asian assets. Really, people are buying Asian assets at this point. So that's really, I think, explains.
Although since the financial crisis hit in the US, that it seems that investment into Asia has picked up significantly.
It has,
and particularly into China.
It has, and I think if you look at global fundraising, global investments, and Asia, and specifically China's percentage of that of the global investments and global fundraising, it's spiking up fairly dramatically. And it's really only over the last couple of years that China has really become the undisputed #1 in Asia, both in terms of fundraising and in terms of investments. And now with the growth of onshore renminbi funds, that's likely to only intensify going forward.
One of the speakers this morning at Super Return Asia spoke about the way, the approach that LPs would take, that they'd be looking at fund of funds regionally, then maybe country specific, and then maybe allocate themselves.
Sure.
Is that your experience?
The general trend has been to start with the pan-regional funds and then move into the smaller domestic local funds in places like China and India. The problem, of course, is the due diligence process. If you don't have feet on the ground, if you don't have people here, if you don't speak the local languages, it's really quite challenging. There are, depending on who you listen to, 1,000+ private equity firms in Asia Pacific. And if you're really not able to distinguish between, who really has the networks, who really has the proprietary deal flow, and really delve into the track records of the managers, that's another problem in Asian private equity. The track records tend to be quite short. People have moved around a lot over the last 10 years in Asian private equity. So you really have to go not just to the firm itself, but to specific deal partners and delve very deeply into who is responsible for the deals. There have been plenty of home run deals in Asia, China specifically, over the last 5 to 10 years, but you really have to get specific into really who's responsible for them, which firm are they working at now, and then, of course, get into the normal aspects of strategy and so on.
There was another interesting comment this morning that one speaker made, that LPs like a crowded room. Sounds like the herd mentality, but is that the case?
I think that one thing that people should always keep an eye on, especially in Asian private equity, is following the herd, following the crowd. probably a pretty dangerous strategy. And we're not going to mention any names here on camera, but if you lined up 100 LPs who spend some time in Asia and ask them who are the best private equity firms in China and who are the best private equity firms in India, you get a pretty similar list from that group of LPs. And our general view is that while there are some very fine GPs amongst that group, there also is a bit of crowd following. And if you really dig into the track records and dig into the numbers of some of the conventional wisdom best firms, you find that some of the firms aren't as good as they're probably cracked up to be. I think what's changed coming out of the global financial crisis is that today people want to see realized track record, cash back to LPs, who is really delivering the goods. And it's a reasonably small number of managers. That number is increasing over time. And there's some very interesting emerging managers in Asia. But at the end of the day, we're now at a stage where people want to see the cash.
Show us the money, yeah.
Yeah.
Just briefly, what are you looking at? What are you focusing on in terms of sectors, in terms of countries within Asia?
Sure. So, as a firm, for us, emerging Asia is really about being still about being opportunistic. So as a firm, I think conservative but opportunistic in terms of geography. We have a heavy overweight on China, as many people do. We do think that it's the most interesting private equity market globally today. We also like the growth dynamics of India, and actually think that the going forward story in India is going to be even more exciting than what we've seen over the last 5 years. We also like markets like Indonesia. Frontier market it is, and we would certainly want to limit the amount of capital we put into that market, but there's some very interesting growth dynamics going on in Indonesia at the moment. So those would be the really three key markets. In terms of style, we're really looking for small mid-market firms, typically under $500 million in India, under $1 billion in China, and groups that are really locally networked, staffed by, run by local people. Having international experience is critical, and we want firms to sort of marry the best of international and local. But at the end of the day, we'll always side with local in Asia, because we think that really to really stay out of trouble, you really need to be able to navigate, and that means being local in these markets.
Doug Coulter of LGT Capital Partners, thanks a lot.
Thank you.